Hey, this is Chris Miles, your anti-financial advisor here and cash flow expert. Hey, I'm here to just answer some quick question about what are the different types of life insurance? Because sometimes you think you got one and you really don't, right? And so I'm going to talk about the three main types of insurances that are out there and the benefits of each one as well as the dangers of each one. So the first one is term insurance, right? Term life insurance, I think most of us get what that is. That's basically you just buy it for a period of time, and then after that point, either you cancel it or you let it renew, and then it costs you a tremendous amount. So the benefit of term insurance is that it's cheap, it's great to use. You could convert it if you get a convertible one. You could convert it to a better policy or a permanent policy down the road. But the main thing is it's economical, it's cheap, it's easy to get. It's not that yeah, it's great for, especially if your cash flow is tight. It's a perfect situation. The downfall of it is over time, if you try to have coverage over time, it does get more expensive. In fact, you might end up paying your death benefit by the time you're in your 70s or 80s. So it almost becomes like self-insurance, because it gets so expensive. But it does have its purpose. Second type of insurance would be universal life. Now, there's all kinds of universal life out there. Universal life is kind of like buy term and invest the difference, right? It's like a 1-year renewable term, so the costs go up each and every year, but it is considered permanent, that you don't have to keep renewing it in a sense. You just have to keep it going or make sure there's enough money going in that allows it to sustain itself. The nice thing is you have a cash value account, this tax-free insurance growth that's in there. So that's kind of cool, right? It also can be cheaper depending on your age. So, I mean, if you're much, much older, maybe you're in your 70s, this could be the option for you. This could be the thing that's much more affordable for you if you need that insurance coverage, right? But again, there are some risks too, depending on what kind of universal life you get. There's variable universal life that goes up and down with the stock market, where it essentially is investing the market with that cash. That can be very dangerous. I used to sell that back in the early 2000s. And when Y2K hit or recessions, people were losing policies, right? You could get index universal life, which is more like this. So it has some, it goes up and down with the market, but it has a cap, a ceiling that it can't go above, usually like 10% or so, and then a floor. Usually it won't go below 0%. The good news is at least there's no losing interest, right? So if the market goes down, at least you're not losing interest. Bad news is that you still have insurance costs coming out, so you could actually lose cash, especially as you get older. It doesn't grow fast enough. It's not designed well enough. You could actually lose that policy in your later years, and it can become very expensive term insurance. So that could be bad. But yeah, again, increasing costs over time, that can also create some issues. The third one, by the way, a cool thing with universal life, it can work really well for some cool strategies like premium financing and things like that. But that's something where you actually get the bank to pay your premiums for you, right? That's a whole nother video we'll talk about later. Now, whole life is the third kind. Whole life is pretty cut and dry. It's kind of vanilla in some ways based on how it's normally set up. I mean, you have a steady premium your whole life or however long you want it to go for, and then you can make it paid up at some point, and you can make it pay for itself, much like universal life. You can actually create to be like that. The way I create whole life, I actually create to be just like universal life, where there's high cash value. The difference is like there's no surrender fees like you have with universal life, where you have all these surrender charges in those first 10, 15 years. There's none of that with whole life. And I can get it to have just as much cash, but you can actually get it from day one. That's the good news. Bad news is that it can be designed poorly or can be made very expensive. For example, in 2006, I was sold a whole life policy from an insurance agent. It was a base premiums, meaning it was just what I was putting in was meeting the insurance costs, right? Well, 2 years later, the recession hit. I didn't have the cash flow to keep dumping in. I had dumped in like 25 grand. But what happened is that, when I couldn't pay the premium anymore, there was only a few $100 of cash value in there, cash savings, right? And so once they borrowed from that, the first couple months, it lapsed. I lost it. It became like the worst term policy. But there are ways to design it to where you can have instant cash. It can self-fund quicker. You can have cash from day one. It can create that whole compound versus simple interest. If you see my video of how to double dip your investment returns, you can create that whole infinite banking strategy with it. That's really awesome. There's lots of cool things you can do. But again, like it has to be the right situation. If cash flow is tight, it is not the right thing to do. But if you're looking to leverage and create biggest bang for your buck, I'll tell you, sometimes universal life, like index universal life could win if you're in the right timing of the market and you design it right, it could win. But more likely than not, I could probably beat it with a whole life policy. So there's good and bad to everything. But those are the different types of insurances out there. If you want to figure out what's best for your situation, reach out to me. You can either go to my website, moneyripples.com, or you can also check out my podcast, The Chris Miles Money Show, that I have tons of episodes on there you can check out and learn more information. So anyways, hey, keep checking out these videos, subscribe, and we'll talk to you guys later.